What are the FHA loan restrictions for investment properties? Have you ever wondered how Federal Housing Administration loans work when it comes to investment properties? Let's break down the key restrictions you need to know. First off, Federal Housing Administration loans are primarily designed for individuals looking to buy homes to live in, not strictly for investment purposes. One of the main restrictions is the owner-occupancy requirement. This means that if you take out a Federal Housing Administration loan, you must live in the property as your primary residence. You cannot use this type of loan to purchase a property solely for rental purposes. However, there is a silver lining. You can buy a multi-unit property, up to 4 units, as long as you occupy one of those units. This allows you to rent out the other units and generate rental income while meeting the owner-occupancy requirement. Now, let's talk about the types of properties you can finance. Federal Housing Administration loans are available for single-family homes and multifamily properties with up to 4 units. If you want to invest, remember that properties with more than 4 units are not eligible for Federal Housing Administration financing. Loan limits are another important aspect. These limits vary based on the county and the number of units in the property. For example, in some areas, the loan limit for a single-family home might be around $524,000 to $125, while for a 4-unit property, it could exceed $1 million. This means you can potentially acquire larger multifamily properties with Federal Housing Administration financing, as long as you follow the occupancy rules. If you already own a property financed with a Federal Housing Administration loan, you might consider refinancing through the Federal Housing Administration Streamline Refinance program. This program allows you to lower your interest rate with less paperwork, but remember, the property must still meet the occupancy requirements. It's essential to note that you cannot use Federal Housing Administration loans to buy properties strictly for investment without living in them. If your goal is to purchase a property just to rent it out, you will need to look into conventional loans or other financing options. For real estate investors, using Federal Housing Administration loans to buy 2 4-unit properties where you live in 1 unit can be a smart strategy. This approach allows you to build rental income while benefiting from lower down payments and more lenient credit requirements. It's a great way to start in real estate investing. Understanding the loan limits by county and unit count is vital to identify properties that fit within Federal Housing Administration guidelines. This knowledge can help you maximize your purchasing power while staying compliant with the rules. Remember, Federal Housing Administration loans restrict investment property use by requiring owner occupancy and limiting financing to properties with no more than 4 units. While they are not suitable for buying purely rental properties, they provide a pathway for investors to enter multifamily real estate by living in 1 unit and renting out the others.